Can you allow me to share, please,
Of
Jonathan?
course, let me do
And
that.
let me grab a water. You kind of caught me off guard. I thought I had a few more minutes, so
I apologize, of
that's all right. Don't
course.
worry. Don't worry.
Uh, uh, uh,
But because I mentally have it prepared for 30 minutes is probably good. So listen, guys, I'm Justin Bush. I really do appreciate the opportunity that Jonathan's given. Very few brokers take that type of approach where they really do ask that and really educate you as real estate professionals in this market, which is quite challenging. So hats off to your broker. And Jonathan, thank you so much again for having me.
Thank you.
All right, so let me see. I can get this thing shared real quick. Let's see, this will stop. All right, can you guys see me now on that screen there?
Yes.
All right, great. All right, guys, so I'm Justin Bush. I'm the market leader with Cardinal Financial. You'll see our contact information throughout the presentation. I am based here in South Florida with a team that also is headed out of Central Florida. Okay, so we have offices both south. Hello, someone there? Can everyone, is that all right? And so either way, just a little bit about me, guys. I've been in the real estate business since 2004. I graduated from college at the University of Kentucky in 2002. Got my start in the mortgage lending business in Weston, Florida, of all places. Lived in Davie for my first year here in South Florida, and then ended up owning a real estate company. We had 300 agents at one point, and a title company. We did that from about 2006 to 2012. Really missed the lending business side of things. So I did get back into residential lending in 2012 with Wells Fargo. I was there for almost 4 years. Took a little stint with Citibank, another small bank, and then a mom and pop broker shop that was based out of Fort Lauderdale for just over 2 years, and then found my home here at Cardinal Financial as the market leader. Our team is about 14 strong. We close somewhere around 20 to 25 transactions per month. And of course, we're always growing. So we actually have the ability to grow alongside of you because our team is really so big. And definitely hit up that QR code right there, guys, as you're seeing these. Please follow us on our social medias. There's lots of great content that we put out on a consistent basis. You guys will get a copy of this presentation as well as we finish up the call today. We'll make sure that this gets out to everyone. I'm going to fly through some portions of it, primarily the condo stuff. There's so much information around the condo. We are going to cover what is, and just so you guys know, we are a 50-state lender. We only specialize in residential lending, right? So we're not doing car loans, we're not doing PPP loans. We're not a big bank, but we are direct lenders. So we are backed by two of the largest hedge funds in the United States. And as being backed by those, we actually do get to keep a lot of loans on our books. So we still price the same way as Fannie and Freddie. But the cool thing is it lets us be more aggressive, especially when it comes to investment properties. All right. So guys, please definitely take down any questions you have. Write those down, and I'll open up for questions as we end the presentation. I do have Liz as well here from my team, who's part of our marketing team. And she's really just an overall success strategist for our group. So definitely welcome, Liz, and thank you for joining us as well. So we're going to cover three things. We're going to cover house, sell, condo. We're going to cover 10 ways to get your offers accepted, and then we're going to cover a little bit of down payment assistance. All right. The condo stuff is going to be the most informational version of it. Again, I'm kind of going to breeze through it because there's just so much info, but you're going to have all the info in the slide deck, and Jonathan's going to share that with you guys after we do this presentation. Okay, so you guys will get an email from us or from Jonathan with all his information. So I actually started out with kind of what is the meat and potatoes of how to sell condo. And really, for those of you out there that are doing listings or trying to win listings, it's really important and the condo space that you know your property. Okay, so when you're going after a listing, you got to separate yourselves to try to win the listing, of course, right? You deal with this whether it's a single family, whether it's a condo. If the seller cannot get it for free, you might want to pay for a condo questionnaire. If you know everything about your condo up front, spend an extra few bucks. Say, hey, seller, this is how committed I am. I'm going to spend 250 bucks, 300 bucks for all the condominium documents up front. And in doing so, what you're saying to them is that, you know what, you really are positioning yourself to sell this property at the most that you possibly can for the seller, right? That's the key, right? All the sellers want to sell as high as possible. But you also have to be able to realistically set expectations for the type of maybe financing that can be done on the property, or is this truly only going to be a cash purchase transaction? Is there something regarding the condo that may keep you from being able to even get a loan on it, right? So things that may keep you from getting a loan would be major litigations around what would be safety issues or structural issues, right? So those are your big targets. Of course, then you have budget issues that could cause you problems. So knowing this information up front is going to help you market it. So if you could put in the listing, for example, you know that this has to go, which is a limited review, and we're going to kind of do a quick little overview of what limited review is. Well, let's say someone's purchasing it as a second home or an investment property. If they're doing such, then they may be limited to, they may have to put 30% down. So they could only have a 70% leverage standpoint. And because they could only have that 70% leverage standpoint, if you literally put that in the listing up front, it'll save a lot of time, right? How much time do we have in this particular market, right? You don't want to show it to 15 people, of which only 5 really have the ability to qualify. So setting that listing up in a way in which is going to separate you and only accepting offers that are going to meet the requirements necessary, or that really are going to allow you to get across the finish line, is going to change your ability to get referrals from that seller, right? I mean, the whole game is not one transaction, it's 2 transactions and 3 transactions. You want to be referred by everyone that you do a listing for. You want it to be a successful transaction because you're coming in more knowledgeable and you're putting up the extra work up front, maybe paying for a condo questionnaire. These are the things that really are going to separate you in this market right now. And especially considering listings are highly competitive to get. Buyers are obviously, everybody can find more buyers right now. That's the easy thing. I think the sellers are the biggest issue. And Jonathan, I think that's something that you're probably having a conversation with on a consistent basis, right? That the buyers are easy to find, sellers are tougher to get a hold of. Getting those listings and being successful with those listings is everything right now. Especially, and listen, we could see the market shift slightly in the next 6 months, 8 months, 12, whatever it is, but there's no real end in sight. As far as what my communication understanding is with brokers like Jonathan and those in this market, is that inventory is the big problem. How do we win inventory? We got to win listings. That's our key, right? So if you have this documentation, you can have it reviewed by myself, my team up front, and we'll show you how to market this property directly. Even from the listing itself, how to set this thing up from a Facebook standpoint. We'll do all these things on your behalf. We'll help you. We'll guide you. And in certain cases, we will do them on your behalf. Okay, so we do have an independent marketing team where we do offer co-branded marketing approach. And if you could go out there and say, hey, listen, I've already reviewed this HOA, I already know what the condominium health feels like from a financial standpoint and a litigation standpoint, this property is going to market best in this approach, right? So you could do it from a video standpoint, you do it from just a basic email blast standpoint, whatever it is. But of course, the listing is going to be the key on how that listing gets set up. So you can expect you're going to have to spend a little bit of money on that in that regard. Now, for the selling agents, those on the buyer side, it's always going to be about communication. Okay, so communication is certainly key. You got to talk to your listing agents, find out if they have the same information that you would have gotten to get that listing, right? Do they have a condo questionnaire? Do they understand their condo? Do they understand if there's any litigation that are going to be issues? So always work towards that with those listing agents. And again, right now, listing agents can be a little tough to deal with. You may be trying to do a showing and you can't even get the showing done. It's kind of crazy. We just happen to live in a market where there's so many realtors that not necessarily all of them are full-time agents. And so they may be taking a listing from someone that's a friend, family, cousin, whatever it may be, and they think they know what they're doing, but they really might not. So you as a full-time agent are really going to have to really press on them from a different level to be successful in maybe getting that. Is that showing that you even want to do, because this property may or may not even fit into what is a finance standpoint from your buyer's perspective or your lender buyer situation, so to speak. I'm going to kind of skip through the rest of this particular slide. I think the big thing is important to know is that you can get both conventional get all of conventional, FHA, and VA financing, okay, as well as jumbo, which is not listed here because it's kind of a separate animal, so to speak. But you can get FHA financing as a single unit approval. So the entire condo building doesn't have to be already approved by Fannie Mae or FHA or VA. We are very successful in getting VAs approved. We've got the Trump Towers approved in Sunny Isles, for example. As a VA, we've had several units in Broward and Palm Beach counties that we've got approved through FHA. And the reason we haven't had many in Miami-Dade is only because we haven't had the opportunity, meaning those particular units haven't had a buyer that fit that. Price point's a little too high because the FHA loan limit is 402,500. So the problem with certain loans is that if it can't push up towards maybe 500,000, it's not going to fit for FHA anyway. All right, so we're just seeing less of that opportunity in the Miami-Dade sectors compared to what's in Broward and Palm Beaches, because there are some lower price points in certain areas. Not to say that they don't exist in Miami, we just haven't really come across those, but it's the same animal. We're dealing with exactly the same situation and it can be done in the same capacity, okay? As you can see with VA, you can do as little as 0% down, okay, on $1 million loan. Go as little as 3% down on Fannie Mae. And of course, FHA is 3.5% down. And then you have what is your debt to income ratios here. All right. If you've got a borrower, here's the key, guys, as a real estate agent, as someone working with buyers, get a good feel for how do they feel from a credit standpoint? What's your credit like? Is there anything that my lender is going to see that they're going to question? Help them understand up front that we're going to review and verify every single thing about you as a borrower. Everything is going to be verified. We have ways of checking your history that you may think something is not going to pop up. We will find it. We do what are not only, of course, the credit checks, but we really do a very in-depth back-end search. Okay, so we're going to look for things that may have popped up under a maiden name. Is anything tied to your social, things of that nature? So being completely transparent as a buyer is going to save you, realtor, us as lenders, everyone, a lot more time. So just ask some basic questions. How's your credit? What are we going to see? What are the things that you think that we may have a concern with? Okay, those, if you just have that question up front, then the setup becomes a little bit different. Because if they say, hey, listen, I just had a foreclosure last week, they're not getting a loan in most cases, unless it's a hard money loan, private equity type of thing. It's going to have to be an investment property only. They're going to be in a position where they're going to have to wait a couple of years before they're going to be able to even qualify. And that's for FHA. Fannie Mae requires 4 years. Jumbo is going to be 4 in most cases as well. All right. VA also more lenient, similar to FHA at 2 years for something like a foreclosure, bankruptcy, deed in lieu. I'm sorry, for a foreclosure on FHA, it actually is 2 years if it's extenuating circumstances. So something happened, you had to go through a divorce, something, or major medical, something like that occurred. Otherwise, you're at 4 years. Fannie's going to put you at 7. VA is going to be the most aggressive at 2 years. Okay. VA is also typically the most aggressive when it comes to your debt to income ratios. And if you have specific questions around these guys, just reach out to me directly, shoot me an email, shoot me a text. I'll get back to you. If at any point I don't respond, call our 800 number. Someone on the team will get to you. Okay. Just don't let it get missed. Sometimes things do get overlooked. It's just the nature of the business right now. We're all pretty busy. We try to make sure nothing ever gets missed, but sometimes they do. Guys, you're going to have this slide. So this is where you can look up to see whether or not your condo is already approved for Fannie or Freddie. I'm sorry, Fannie or Freddie is the same one for Fannie here. That applies to both Fannie and Freddie. FHA is going to be this particular link. And they're very few in the Miami-Dade region. There's a little bit in Broward and a little bit in Palm Beach, but you can look up any county right here. But again, just because it's on the list doesn't mean it doesn't qualify. All right. We got 3 options for different types of approval when it comes to Fannie Mae. You can have a limited review. You can have full review and spot approvals. Okay. And that means it's not on those lists already. And then if you have a situation, for example, your borrower's got 10% down, but maybe it's got budget issues. Doesn't have the 10% reserves required by Fannie and Freddie, then we have some alternatives as long as their credit scores are high enough, meaning it's 680 minimum for a primary residence. Okay. Limited review, LTV table. We are the redhead stepchildren here in Florida. These are much more aggressive in every other state in the United States, but in Florida, if you want to go limited review, means we're not checking the budget portion of it, right? We're not reviewing that budget piece. You got to have 25% down as a primary residence. As a second home, it's a 70% LTV or 30% down, and the same thing with investment. Okay. Again, there's more details that goes into this, but don't hesitate to reach out. Again, here's the one part that we get to review is you don't necessarily need a condo questionnaire. You just need a handful of questions to answer, which is, do you have any major litigations? Okay, we're not checking the budget, we're not reviewing the budget, and we're not checking the amount of delinquencies in the HOA. All right, those are the big things that separate limited review. Otherwise, you're a full review, you're gonna need your condo questionnaire, we're gonna review the budget, we're gonna have to follow the guidelines around delinquencies, but then at that point, you do as little as 3% down, though 5% is the most common. I'm going to skip through this particular slide because it's just a little too much to go through. You guys will have all these details. Let's skip through that one too. You definitely plug into this example here. This is a great alternative for jumbo products. So if someone really doesn't have what is a 20% down for a jumbo loan, though we do now have jumbo loan products that are as little as 10% down. Rates are definitely pushing into the 4s, especially with all the changes that have occurred in the last few weeks when it comes to rates and jumbo products. Rates kind of had gone down. Now they're pushing back up, but that's just the market we're in. As long as you can qualify, you can qualify. It is what it is. So let's just take advantage of what the programs are and that are out there. In this particular case, we're using a HELOC, home equity line of credit, as a second lien position, basically a second mortgage. It is not fixed, but those rates are still low. They're in the low 4s, high 3s. They can push up towards the 5s depending on their credit score, but this may be a great alternative to someone that's trying to buy something around $850,000, for example, and really only has that 10% down, 85 grand plus whatever their closing costs are. Let's assume they're 20 grand, for example, 25 grand. They've only got 110 grand to close. That's not 20% down. They're not going to qualify for a jumbo loan. This is a huge solution for those particular types of borrowers. So definitely keep that in mind. All right. So you definitely have a lot more flexibility right now than we had even 4 months ago when it comes to down payment. All right. So a lot has changed and it's a lot more aggressive in the market. The rates again do push up a little bit, but that's just part of the business, right? The more risk, the higher the cost. Okay. This is a review of what it requires for FHA spot or single unit approvals. I'm not going to go through that in great detail. This one either, but condo knows. The more difficult particular types of units that you're going to have trouble with are going to be your short-term rentals, your condo tels, a building where the HOA has not been turned over by the developer. So it's a new building, maybe it's only 18 months since they started delivering and they haven't turned it over yet. Those are going to be the ones that are going to cause you more issues. New construction, unless it has a PERS approval, which has already been approved by Fannie out of the gate, is going to be very difficult to do from a conventional FHA or any other lending standpoint. You're going to have to go private portfolio product sets. You have your local banks that are going to be more aggressive around that. Happy to introduce you to those that can do those types of loans if you come across that. Can't have excessive commercial space, so it can't be 50% commercial, 50% retail. Typically, as long as the commercial space is less than 20% or normal for the area, you're going to be okay. Okay, so that an example of the difference would be, it may be different than in Brickell than it would be in Kendall as far as commercial space allowance. But that's not something we deal a lot with or have much issue around. So don't get too hung up on that portion of it. Next set we're going to go through, guys, is 10 ways to get your offers accepted. One of the big things you guys can do right now, because sellers are having, I think a lot of the issue we're running into is that sellers have a lot of hesitation around selling because they don't know if they're going to be able to find something or find something as quickly as they want to. Maybe they've got to deal with another seller on the other end of their transaction, whatever that may be. You can always offer a rent back. It can't exceed 60 days or whatever is required per the guidelines for that particular property for occupancy. So if you have specific questions around that, definitely let us know. If sometimes too, another great solution is taking out a HELOC on a property while it's still their primary residence. This is something that is possible. You can do this. It is not something we would do directly. We would just be referring you to a bank that would allow you to do that, knowing that you're getting ready to transition into a new purchase property. Okay, so it's kind of a bridge concept, but there are options around this. So definitely take that into consideration. Also too, sometimes the answer may be taking cash out of a property to pay off debt so that you can qualify for more loan. All right, so that's one of the things definitely keep in mind. There are always solutions there could be more solutions than you think. So the big difference between working with someone like Cardinal versus if you were to go to Wells Fargo or Chase or Bank of America, those big banks, they're just so big, they don't get that creative. They're not going to take that approach of what are all the solutions. We're a solution-based approach to mortgage lending, offering the same rates and with a much better experience that you would get at a big bank. Another big thing is you want to make sure that if you're submitting offers, that your listing site knows who your buyers are working with, right? So we always send out our 5-star reviews as part of our pre-qual. We send it out as part of our platinum pre-approval, which we're getting ready to cover. These are things that are going to help build confidence on the seller side. If you know that working with Justin's team at Cardinal Financial, they've got 55-star reviews on Google, and that doesn't even touch what we do through experience.com and these other review systems that we do use. This is just Google, the most sought after and most respected review system. And we have the highest rating. You want to make sure that your lenders have the highest rating when you're submitting those offers, and you're putting that in front of them because you know that the sellers want confidence, right? They're looking for confidence in your ability to perform. And that includes you as the person putting the offer in as a realtor, how qualified their buyer is, and how great people behind them is from a lending standpoint. At Cardinal, we offer what is a platinum pre-approval. This means it has a stamp of an underwriter on it. So we've already taken it into underwriting. We've reviewed your credit, your income, your assets, your employment, and your residence history over the last 2 years. This is not just the salesperson at the retail sales position, the guy sitting at the desk or me even. This means it's actually gone to the person that's making a decision outside, inside of Cardinal, but with taking all the information we provided them, right? So that means that we've checked off and we are now approved up to a certain purchase price. And we actually have a system now that's set up for you as real estate agents. You can go in and adjust your pre-approval. Your platinum pre-approval can be adjusted with a purchase price as long as it doesn't exceed a certain amount. All right, so this is a way that we're making it easier for you to submit offers with exactly the numbers you want on this platinum pre-approval. All right, so first you come from pre-qual. Our platinum pre-approvals are delivered in 48 hours typically, assuming that we have everything that we absolutely need, which isn't, it's really just your income docs again, a completed application, and we need to see your assets, of course, review the credit. All right, so this is going to set yourself apart in a bidding war if you've got more information and you're already approved by the underwriter. At this point, we're just plugging in what is a property address. And as fast as we can get appraisal back, even if there's an appraisal contingency, we still got to have an appraisal. Okay, guys? So as long as your buyer is willing to purchase above the appraised value in a situation of no appraisal contingency. Now, if you run into a situation where we can always talk about how we can make sure that we can get them out of that contract, we can talk about that on a one-to-one basis. But there are things certainly that could go wrong in the loan side of things to get you out of a contract. So keep that in mind. The appraisal contingency portion is one of those things where you should feel comfortable waiving as long as your lender and your buyers are on the same page. All right, so definitely communicate. It's all about communication, as we discussed. On-time closing guarantee is something we offer at Cardinal Financial. There is some information that isn't included in this little piece here where if for whatever reason, and we do offer $1,500 if for whatever reason the loan doesn't close on time, which never happens. We always close on time. We can close as fast as we get appraisal again, and we can get title back. Okay, so if there's a title issue, so if there's a third-party issue or a seller problem, of course, and we can't close on time, we're not going to pay the on-time closing guarantee. But if for whatever reason it was our fault, we would give that back to the buyer. All right, so this is more a design of giving the sellers confidence. We are so comfortable with our platinum pre-approval and the fact that our loan has been underwritten that we're going to say we're going to give up $1,500 if we don't close on time. So if you have a borrower that's got a platinum pre-approval from Cardinal Financial and my team, and you need to close in 2 weeks, we'll close in 2 weeks. We just went clear to close on a deal that had been under contract. They're working with Bank of America forever. We were able to get a clear to close in 6 business days. And we didn't have a platinum pre-approval in advance on this particular property. So we do move that quickly as necessary. I do think right now we're seeing longer contracts because the sellers are needing more time in a lot of situations, depending on their, especially if the seller is occupying. I think that in the investment world and second home, they're just as aggressive as they always have been, closing in 2 weeks, 3 weeks, 4 weeks, whatever that may be. But the reality is that there should be no difference if you have a strong buyer and their ability to perform. There's no difference between a cash contract and a lending contract or a finance contract, I should say, that would keep your sellers from taking the finance contract if it's a better offer than the cash offer. They should want to take a higher offer if it's going to meet the requirements of what that seller really wants, which is a higher price, right? Because you should be able to close just about as quickly in most cases. Okay, guys? This is going to give them a lot more confidence. We do close faster than big banks. The average big bank closes in, or average lenders in general close in about 58 days. We really do close in 30 days or less all the time. That's what we do. We also like to get in touch and talk to the listing agent up front. So if you're getting ready to put an offer in, start communicating with your lender, whether it's us, just a different lender. Have us reach out to your listing side. Let us get them comfortable. Hey, there's an offer. It looks like we may have a chance of getting this offer accepted. Ask us to reach out to the listing side. Give them that much more comfort. And if you want, and we'll do a video that says how strong the buyer is around exactly the same. and we'll set the expectations even through video on top of an email. So now you've got just another piece of confidence building as part of your arsenal, right? It's really going to make a difference for you guys. So definitely keep those in mind. A buyer love letter. So especially for those buying a primary residence, maybe it's their first home, maybe it's because they want to live in a specific school district, maybe they have the perfect band or perfect program for their kid. Make sure that you're as representing the buyer, that you know why this property is so important or that area is so important. This way you can tell that story to the sellers. Okay, there's a little bit of conflict that I've heard about. You can't send that information directly to the seller. My opinion is sometimes you just got to do what you have to do. If you feel like it's going to be something that maybe doesn't meet the requirements or regulation around being a real estate agent because you're passing along information, then introduce the listing agent directly to the buyer, which I believe is okay. And say, hey, listing agent, please meet buyer. Buyer sends video, buyer sends letter directly. Okay, I think that's the workaround for some of the concerns I've heard. Make sure that the people that you're dealing with from a lending standpoint know their business, right? So we know this market inside and out. All right, so just because we lend in 50 states doesn't mean that we're going to be the best lender, for example, in Texas. Right? It's a little more complicated in Texas for certain reasons. Hawaii, similar type of thing. Here in South Florida, we're very, very concentrated on the condo stuff. So we really are condo experts. We do know condo inside and out. We can set the expectations. We'll have everybody on the same page. This will make a difference. It'll help set expectations. It'll help make your buyers comfortable. And remember, the most important thing about what is a tough world of purchase market right now that we live in is that if you don't have the right lender behind you, you may work 6 months, right? Getting someone in the contract, getting through the loan, all the stuff. Well, if they have a bad loan experience, it may not matter how hard you work for 6 months showing them 150 properties or 500 properties, whatever the number is. You may lose the referral opportunity because of the experience and because of the lack of communication, because expectations weren't set appropriately. Guys, that is the most important thing right now, is making sure that you do get that referral because you're working with the right team. All right, so it goes all the way down through who you guys use for your title, who you guys use for, of course, the lender, and then everybody from the insurance standpoint, so on and so forth. All right, obviously with having the leadership that you guys have with Jonathan, it's going to make a difference because he's setting you up for success by making sure that the information is in front of you. Just make sure that you're always communicating and that you have a really, really good feel for what the market is expecting. And that way that way your buyers, your clients will continue to refer you, because again, there's nothing easy about the market that we're in right now. That's the reality. It's all right. We still do it every day. All right. This is what we do. So we can get through as long as we set expectations. People have an amazing experience. The seller ultimately makes the choice at the end of the day, right? So if you're a listing agent, you have to present every bit of the information to the seller, right? Or supposed to. It's not say that always happens, but that is the integrity of this business. It is supposed to work this way. So make sure that you have a really good feel for what that seller is looking for. So again, communication as the realtors on both the buy side and the sell side. As long as you truly understand your client or the client across the table, it's going to change the way that things get done. Because if you don't truly understand how fast the seller may want to close or may not want to close up front, it's going to create a different experience on your side. I have this happen all the time where we'll get a 60-day contract and then the contract gets pushed out to 75 or 90 days because the communication wasn't set right up front. Now what's going to happen is that if we locked a rate based on 60 days, now we have to extend for an extra 15 or 30 days. It's going to get pretty expensive for the buyer. Okay, so as simple as hey, do you really think we're going to close within 60 days? Do you really think we can close within 2 weeks? Do you want to close faster than 30 days? If they're asking you how long you need to close, you need to make sure that they're on the same page as their party is. Meaning they think that they want to close in 30 days. They think they want to close in 45 days. What's the reality of closing sooner in certain instances? Because it could change how the rate gets locked and the cost associated for the buyer. All right. So again, it's always about communication. Guys, we do now have an internal down payment assistance program. This is going to be FHA based only right now. We do not offer this for conventional yet, though we do expect to see it coming in the, in the months ahead, though we don't know when that's going to be. Without getting into a ton of detail, we're going to pass this information along to you guys. But the point is that you could do, as long as your credit score is at least a 620, you literally could go up to a DTI of 50% and get what is a 35 or 3.5% is down payment assistance up to 5% in down payment assistance. Okay, so on an FHA loan, if you're putting 3.5 down, for example, and you got 5% in down payment assistance, that would leave you with 1.5% to be applied towards your closing costs and your prepaids. All right, so this is a really cool product. One is forgivable, one is a 0% loan, one's a 5% loan, but this product really does fit a lot more people than you would think. And the cool thing is that we can do this in 49 states. It's not county based. We underwrite it in-house and we do the funding ourselves in-house. So we're not waiting 45, 60 days for someone else to make a decision. We're waiting for funds to become available. They are available, and we literally do this internally. It's part of our initial underwrite. We will get this review back, even if it was to be a platinum pre-approval, in as little as 4 days as a platinum pre-approval with down payment assistance. And that's a cool thing. So the one thing definitely, guys, to remember when it comes to FHA is that condos are going to be tougher than anything that has a lot and block in their legal description. Just because it's a townhouse or you think it's a townhouse doesn't mean that it's not a condo. So if you see the word condo in the legal description, that is a condominium and you need to prepare accordingly. All right, so condos are always going to be tougher. They are doable, but and if you want to reach out, we'll kind of give you a quick little checklist on the documents to collect up front or to ask and request from the seller side before you start showing properties. Do you have the budget? Does it have a 10% reserves? Is there any major litigation? These are the things that are going to change everything when it comes to condo communication, guys. It's always about the litigation and the budget if it's a primary residence and investment property. Ways we're going to save you time, guys. We save our realtors on average about 5 hours per transaction because we continue to communicate. You're going to get 2 updates from us per week at a minimum. One's going to be a phone call. Second one's going to be an email at the end of each week. Or sometimes it could be a Wednesday or Thursday, for example, because we know that nothing else is expected this week. So there's your weekly update. We got your appraisal back. It's good to go. We're just waiting on condo to get approved. We're only pending insurance at this point. Buyers got 3 quotes in hand. They're trying to make a decision. Information like that's going to save you a lot of time. You don't have to ask us. We're giving it to you on a consistent basis. So every Tuesday you get a verbal update and then some sort of update also manually throughout the week, but you're going to see constant communication from us. Of course, we do close faster and can close as fast as necessary. We do guarantee that we'll close on time if your borrower has been pre-approved. And we do take pride in the fact that we educate. We're here to educate and consult. All right. So if you just have questions, we're happy to help you. We want the experience to be great for you. We don't expect you guys to know our business. We don't know your business. Our job is to work together and to make your buyers very, very comfortable, as well as maybe even your listings. If you've got listings and you don't know if you should accept this particular offer, don't hesitate to reach out. I could tell you where maybe this is, my team could tell you if that maybe is going to be an issue, that this approach and this contract and based on the way this loan's been maybe pre-approved or it's only been pre-qualified and they haven't provided a whole lot more information than that, it really could change the scope in which time could be wasted on the listing side of things. Okay, so, and again, of course, we're going to work with your listing agents to get your offers accepted when you're representing the buyer side. Guys, that's all I've got. You can reach out to, and you'll have my direct email as well in an email. If you want to reach out to me personally, of course, the office line. Don't hesitate to follow us on social media, and I'll open it up for any questions you guys have at this point.
Justin, I have a small question
Sure.
about condo questionnaire and qualifying a condo as on the listing side. There is a big anxiety with listing agents or with even buyer's agents when it comes to condo. Many listing agents says in advance, we don't even deal with loans completely. We're gonna go cash only. Otherwise, we're gonna waste our buyer time. We're gonna waste our seller's time. We're gonna waste everyone's time, and at the end, everything is gonna fall through. And many times that was the case in the past. Has something changed recently? Is it easier now than the past years?
So I think that kind of leads us right into what I believe is the biggest opportunity around condo and getting listings, which is know your property, right? Know your property, spend the time so that you do market appropriately and accept appropriate offers. So if you know for sure that it doesn't have, say, that 10% reserves. Now, there is a workaround for 10% reserves. So this is one of those things where we can help you pull together a presentation when it comes to going out and getting listings. If you know that, okay, we don't have the 10% reserves, but we have what is a reserve study. It's a third-party reserve study. It was done 2 years ago, and we're now budgeting based on that reserve study. Well, that bypasses the need for having that 10% reserves. Okay, so if you know that much information up front, now you get to say, all right, guys, now we can list this as little as 3% down conventional financing. Well, now, or what does that say to a seller? You went out there, you got all the information. Hey, seller, we actually can set higher offers, as long as, of course, we're going to meet the appraised value, or we're going to get appraisal waiver, right? Contingency's gone. They may be able to sell that condo at $15,000 more or 10% more because you did that work up front. And you know that, and that's why you're going to get that listing. So if you had to spend a few $100 to get the listing, or be a great salesperson and get them to spend the money on these things up front, we'll show you what to get. So as far as things having really changed, no. I think that what's changed is the fact that you're here on this call with me more than anything. Is that if you have the right communication and you understand your business better, you'll get more listings and you'll be able to sell at the realistic or the highest price because you're doing the work up front. And so that's what and it's easy as a listing person right now to say, I don't want to put in the work, but it's also hard to get listings right now, right? Everybody wants to sell or they don't want to sell. It's one or the other, right? So if you know how to present it to someone who's like, oh, but I hear that, it's like we can only sell it to cash or this or that, but if you're not having the right conversation and you don't know for sure that that's really truly the case, what you're going to have in this live presentation when you share this with your team, Jonathan, is a lot of information that's going to help your realtors design a way to sell listing opportunities. Because at the end of the day, you want to do one of two things as a listing, right? You want to sell at the highest price, and you want to waste as little time as possible by making sure that we have the right deal. Now, how do you do both? You got to have enough information. So to answer your question, yeah, there are certain instances where everything about that condominium says it does have to be a cash purchase, right? But that's really rarely the case. I think that more than anything, it tends to be a lack of communication and approach of intention, and the right intention to sell at the highest price and avoid wasting time and marketing appropriately. This condo will sell with as little as 5% down. this condo will approve for FHA financing. Like, that is a different ballgame for a seller. It's your job as the agent who's going out there and they're doing the listing presentation to show them why it is that you are the person to list their property, because you're going to make sure that those opportunities aren't missed. By teaching them even how to spend their money in a way that's going to help them sell the property at a higher price. And then imagine this: you get one listing in the building, you do better than everybody else has been able to do in that building because you took the right approach. How many listings do you think you're going to get out of that building? A lot more. All right. It's going to become a snowball effect. Everybody's going to know that Jonathan is the man in this condo because he was able to do more. Look at the way he marketed this property. He got it under contract, got it closed and sold at 10% higher than everybody else because he showed the seller how, if they spent $250 to $400 to get the condo docs, everything that you need to approve it for FHA, they end up getting a 10% higher price than the last closing, for example. So the FHA is a kind of a tough example because of the appraisal stuff around it. But again, remember, this is an approach to get more listings. It's not because the listing is necessarily going to sell differently than it would had you not gotten the information. It may be the same result. But if you take this approach, you're going to get more listings as an agent.
Well,
because you're separating yourself. Does that make sense?
Absolutely. Perfect sense. Let's see if anyone else has questions. Any questions? No one.
All right, cool. But if you guys do ever have questions, don't hesitate to reach out to myself, my team. We'll get back to you, and then please, by all means, follow us. And we'll be sure to share this. I guess you're going to share the presentation for us, right?
Yes.
Do you have it recorded?
On our website, yes, definitely.
All right, awesome. And then if you like, we can link up to that as well. Okay.
Definitely.
We work with Liz on that. And then we're going to share this presentation with you so that you can share this with your team as well. All right.
I appreciate that.
All right. You're well, no worries. And then if you want, we'll circle back after you guys finish up. I know you guys probably have a couple more things to cover for your weekly sales call, but if you don't have any other questions, I'm going to jump off and get the rest of my Monday going.
Thank you so much, Justin.
My pleasure.
Okay.
All right.
Talk later.
All right. Take care. All right. Bye-bye.
Okay, everyone. So I hope everyone can hear me. 1 second, let me just make sure. Yes. So thank you, Justin, for this presentation. We were supposed to have another presentation by Showingly, as I said earlier. They contacted me and they informed me that they had a technical difficulty and they will give us the presentation next week. So we do have them. We do have another presentation as well next week. We are going to have classes every Monday at 11 a.m. So I hope to see everyone there. The classes are open to all our agents and to any other agent that you know that can benefit from that. So invite your friends, feel free to do that. We want to have as much agents get as much important information as we can. We want to give it and share it with everyone. So I hope you guys enjoyed it. I will see you again next week at 11 a.m. We will have this presentation, as I said before, live on our website. So I'm sorry, recorded on our website, so you can view it anytime. So I hope you guys enjoy it, and everyone have a great week. See you next time. See you. Bye-bye.